Good morning and a Happy New Year to all our viewers. I trust that last year was a successful year for all of you, and I wish you another year of health, happiness, and prosperity. I can't help you with the health or happiness, but I hope I can make a contribution to your prosperity this year. For me, I'm looking for ways to increase my viewership in 2014. I'd be grateful for any ideas that you have. Please send them to me at mgitler@ironfx.com. My teenage daughter kindly referred me to some of the people she watches on YouTube, some of whom have over 1 million followers. She thought maybe I could get some tips from their success. From looking at them, it seems that the best way to get viewers is by giving out advice on makeup and hair care. Unfortunately, I don't think that's going to work for me. Getting to the market, I had thought that the dollar's weakness in late December was due largely to year-end position closing and wasn't a reflection of the currency's likely direction in 2014. We're only a few hours into the year, but so far it seems that I was right. The dollar is up against most of its G10 counterparts this morning, as well as the EM currencies. The only major exception is sterling, which has gained across the board this morning. I expect to see more dollar buying as the day goes on. The world's manufacturing PMIs for December will be announced today. The U.S. ISM index is expected to fall slightly. That could put a dent in the dollar's strong start, but the U.S. ISM index remains a lot higher than the PMIs of other countries, which should still continue to support the dollar. And furthermore, the FX market seems to have decoupled from fundamentals in the last week or two of the year. We could have a similar period immediately following the beginning of the new year. For this year as a whole, using Bloomberg's consensus forecast, the market expects the Australian dollar to be the winner. It's expected to decline only 1.3% against the dollar on a spot basis, the smallest expected decline of any of the G10 currencies. Moreover, since it's got the second highest interest rate of any of the G10, after taking account this positive carry, it's expected to have a 1.35% total profit against the dollar. The New Zealand dollar is expected to show a 2.6% spot decline against the dollar, but a 0.3% positive total return, as it has the highest interest rate among the G10. All of the other G10 currencies are forecast to show both a negative spot and negative total return versus the dollar, with the Swiss franc being the bottom, an 8.9% forecast total loss against the US dollar. The yen is expected to be in the middle with a 3.4% spot loss and 3.3% total return loss. This seems to me unlikely, as the yen is usually at the extremes. For the last 11 years, it hasn't really been in the middle. It's been either one of the best performing or one of the worst performing currencies. Now, these are the market forecasts, not mine. I'll be discussing mine over the coming days and weeks. For more information, including a review of 2013's performance, plus technical analysis on today's market, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.